Today is May 5, 4:03 p.m. The market is closed. And we wanted to go over the Western Alliance Bank. WAL is the ticker. As you know, it had rallied 49% today after its big drop yesterday, all the way down here, close to about $11. And since then, it has rallied. And so this regional bank, as you know, is very uncertain during these times. And so in this video, we want to identify some unusual option activity to make sense of this chaos going on. And then two, we're going to analyze to find out what the direction of these unusual options are. And then third, we're going to show you how we are trading this based on these unusual options. So without further ado, let's get right to it. These unusual options we saw that were most significant to us was actually done just about 3:49 p.m. You'll see this just about 10 minutes before the market had closed. You'll see there's 600 of these contracts here, and that this was the only spread here as far as the large quantities here. You'll see this under the condition. And so when we analyze this trade and take a look at what this means, you can tell that because this expires today, and that this was a 25.5 strike call, which was in the money because this it was at $26 when this was placed. Then basically this was bullish, and then they sold the 29 strike calls. So they created a bullish vertical call spread with this trade. And by doing so, they may have already been able to exercise these shares, or at the end of it, they'll be able to decide what to do to convert this option into a call option. But the main thing they wanted to do was mostly to sell this 29 strike call, because selling the options during this high volatile time is the most advantageous during high IV. You'll see here today's IV percentile is at 77%, and the implied volatility is at 315%. So selling the options is very, very advantageous. And so when they had bought the 25.5 strikes just 10 minutes before market close, 25.5, you'll see that here. These are opening orders. There wasn't much extrinsic value. You'll see here when they bought it, it was 0.05. And so that allows them to then sell that May 12. That extrinsic value was at 2.5. So they're actually going to be at a net credit of extrinsic value, which is very good because the value of options is basically the extrinsic value. So they took advantage of that, and that's also what we did. You'll see here that we are also in the position of selling this 29 strike call. And so what we also did was we then went out to the May 19th, 14 days away, and we bought the 25 strike options. And so because we didn't want to own 100 shares of this stock, we did this instead. And what you'll see here is that this is a bullish diagonal spread. The current price is at 27. And so anything above this zero line here on the y-axis is profit. So this is our break even all the way over at $25. So this stock can fall to $25 and we will still be at break even by next week. So keep that in mind. This is just 1 week away. It's a 1 week trade because anything could happen in a week with these very uncertain times for these regional banks. But we think it should consolidate in this range for at least this week, that the next coming week, like around this range here. And that this was this dip, just like here, a dip comes back and consolidates in this range. And so we are taking advantage and selling that same 29 strike call that these large institutions are doing as well. And so if you want to ever be notified of these unusual option activity, you can subscribe, hit the bell icon, and you'll be notified. And please smash that like button, and it helps us really continue to make more videos even when the market is closed, to try to educate as many people as possible on how to use unusual options as part of your trading strategy. Okay, so take care and have a great weekend, everybody.